the block. Okay, so activity 13.5 on page 338. That's what we want to look at. So how are you with your budgets now? Is it going better, the production budget and your sales budget and your labor budget and your material budget? Are you okay with that now? You can ace that in the exam.
The way you explained it as easier, you did make it way easier, but I think I just need to go through a few more like past papers and stuff like that, just to get more of the hang of it. But I understand like the concept
Practice.
behind it. Yeah.
It's a lot of practice, pen to paper. You saw that article. Did I send that article to you people as well about where they prove that writing actually? I think I sent it to you people. But anyway, Robin, how's yours going now with the? I'll resend it if I didn't. Robin, how's yours going? I thought you're not attending
It's
today.
going well, Afisa. No, I reshuffled my plans. This is more important.
Oh no, no people coming to the door today.
I am still expecting somebody to come though. Yes, come today.
Okay, and okay, so it's going better for you. Just practice, practice, practice a lot. Then it gets better. And Nolo? Nolo doesn't want to talk to us. There's another person that says live. I don't know who that is. I can't ask. Madeline, how's it going with you? Madeline's always very quiet.
I'm doing okay. I'm feeling more comfortable with doing the budgets now. So yeah, but I suppose it's just practice, man.
Yes, it is. But budgets always come in. Some budget is gonna come in. And now that you're doing multiple choice, all might come in. So just might be ready. Londiwe? I'm not so worried about that person that's trying to get in the group, Shame. Hi. How's your budgets? Okay. Okay, let's get started. Okay, the other person that's trying to get in, she can't get in, she. So, okay, let's look at activity 13.5, page 338. Okay, ABC, manufacturing manufactures a single product. The following information was gathered from which the operational budget for the year 30th of June must be prepared. Production requirements, blah, 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 blah. Inventory on the 1st of July, direct materials and finished goods. Closing inventory of goods must be equal to 10% of the budgeted sales. Closing inventory of direct materials must match the closing inventory of finished goods. Very important. There will be no opening inventory or closing, and then the Fifo method applies. Okay, the company. My daughter's not screaming. It's not FIFO, it's FIFO. Okay, the company expects to sell 1,300 units at a selling price of 1,200 each. Period costs are expected to be 322K. So now they want us to prepare the following budget, and this will be the end, because then we're going to move over to the operational budget and the merchandise budget, the retail budget. So this is the last, just to recap. So because everybody bragged, boasted about how good they are, so we're going to do it now. Let's start with the sales budget. So we know that sales budget must have something like volume, like I told you, we're going to study it, volume and rand value. And then it will give you the total rand value. Okay, so let's go look for our information. Okay, so where do we start? Where do we go to? Anybody?
Expected sales.
Yes.
Yes. Remember, any budget is expected. There's nothing real about the budget, eh? You know that story when you budget for something, it never works out. So, what did we expect to sell? And so now
1,300
draw.
units.
And our rand value?
The
For
1,200.
Yes. And so our total is 1,560,000,560. Can you see how easy it becomes if you draw this framework? Because this is what you're going to study, so that in the exam you don't get confused. Let's do the next one. Our projected, our production budget. Once again, there's a framework for the production budget. We know that, and this is the framework that we're going to study. We know that it is sales volume, no? Not rand value. Sales volume, right? And then we add our closing inventory. Then we minus our opening or less. Let's just say less. Is our opening inventory, and then and that's it. So that will be our production requirements. So you give it to me. I've done the framework.
the sales is
Remember, the first figure we're always going to get from our sales budget.
yes.
Okay,
which is the
1,300.
1,200. Yeah.
The volume. Why am I
And
writing the? Have you ever had those days where you can't type? I don't know what is happening, but you just can't type. Okay, yes, so you're going to add your closing inventory. So you need to give me your closing inventory now.
They say your closing inventory of finished goods must be equal to 10% of budgeted sales. So it's
Okay,
130.
so it is then. That's correct. So now we've got 1430. So now we have to less our opening inventory. So what is our opening inventory?
Aziza, the sales volume must be
Yes.
1,300.
Yeah.
Sorry, 1,300.
Yes.
Okay, let's continue.
Is
So our opening inventory.
Is that finished goods 100 units at 390? That one.
That, yes. Finished goods is your opening inventory. Okay, so we're gonna minus it. Okay.
And then your total,
so now we've got
1,300.
the 13.
Yeah.
Okay. For the people that came in late, we are doing activity 13.5 on page 336. Is there any people who joined, who's here for the first time today? Nobody? The names all look familiar. Okay, so we don't have to worry. Okay. Let's do the next one is the direct material budget. So what is the direct material budget? Once again, we start with the volume of sales. Everything is or the volume of sales or the volume of units of production that you start with. Sorry, the production requirement, sorry. Why can I not type? which is the 1,330. Right. So, how many kilograms per unit am I going to need of material? I say direct material, the expected cost is 50 kgs, 2 kilo.
Yeah.
Direct labor is 3. Okay, so what is it?
It is times that 2.
Okay, so you're going to times 2 because we need so that is the amount that we need. Okay, so right, so now we have to add our closing inventory. So what is my closing inventory?
So your closing inventory, we calculated there. That's the by the what it was 1,000. Sorry, it was 130 rand. Am I correct? Sorry, 130 rand of units, and they're telling us now that per per unit it's 2 kilos each.
That's it.
Then you times that, and then you get your closing inventory.
Okay, so you get the 260.
Yes.
Okay.
Okay, let me just put that down.
Okay, so if you add it together, you get the 2,920. Now you have to deduct your opening inventory. Okay. So what is my opening inventory?
That 200 kilos.
Yes.
100 times the 2.
Yes.
So it's then 200. Okay, so I'm going to deduct the 200. Okay, then I'm sitting with the purchases required. Okay, and the price.
And that's at 50 rand a kilo.
Okay. 50 rand. Okay, so why am I putting the 50 bucks there? Delete. Okay. So let's just put your price. Okay, so my total cost is 136,000. So that's my total cost of what? 1,330 units will cost me in material.
136.
Okay. Let's do the direct labor budget.
Just hold on.
Okay.
It's actually less confusing if they just give you 1 month basically to work it out instead of like January, February, and Yeah.
I like the way you say that. Everything is about tricking you or testing you.
Yeah.
It's just testing you. Okay,
Yeah.
are we ready for the direct labor budget?
Yes.
Okay, once again, we start with the volume
Yes.
needed, which is the 1330. Okay, one, they say there that direct labor hours, 3 hours. So let's say 3 hours, right? So you're going to get 3,990. Okay, right? Hours required with a material budget. It was kilograms or whatever they're using, milligrams or whatever. Okay, but it's the unit of measure they required. Okay, so the total direct labor hours, right, was then the 23990, and it's 90 rand an hour. Okay, let's
Sorry,
just say
Aziza.
labor rate.
Sorry,
Yes,
Aziza. The 1330
yes.
taking the production required in units from production.
Sorry, you're cutting away. What are you saying?
The 1330 amount, we taking the one from production budget.
Yes.
Yes, yes.
All right,
It's come
thank
from
you.
there. Your
Okay.
production, your
Okay.
production budget, it's opening the way for your other budget.
All right, thank you so much.
Yes. Because remember, your production budget is going to say how much units I'm going to require to produce if I want to
Yes.
sell 10 million products. So if I want to make 10 million rand, how much am I going to use to? How am I going to get that 10 million rand? How many units am I going to need to produce? Once I have my units that I'm going to produce, if I must produce 5,000 shoes, I'm going to need to know on 5,000 shoes, how much material am I going to budget for? Because you can't want to make 5,000 shoes, but you didn't have the budget, you don't have the money for the material and the labor.
All right.
Okay.
Thanks so much. Thank you.
Let's move on to the production overhead budget. We didn't do this one yet. Okay.
Just before,
Yes.
sorry, Aziza. Just before we move on to the production overhead budget, I just want to go back to the production budget, where I realized that on the production budget, we did a previous example also on Thursday night. They don't always give you the opening inventory.
They don't always give it to you, but they're going to give you some indication. Yeah.
Okay. Of how you can be able to work it out and get it.
Yes, they're going to have to give you something.
Okay.
To work with. You just are going to have to find out what is that something that they want you to work with. Okay, so let's start again. Once again, my production overhead budget. How much volume for the production requirements? I'm just keeping it in this line here if you're finding it difficult to follow.
Okay.
Okay. So now, okay, my labor hours here, right? Because let's just see. Okay, so your production overhead budget, okay, you will use your labor hours, okay? So I've got my 3,900 labor hours. Sorry, 3,990 labor hours. Okay, but on my variable production overhead budget, it says 20 Rand per direct labor hour. Okay, so my direct labor hour, right, was 20 Rand. Okay, so Where's my calculator? Oh, here it is. So the 3990 times the 20. Okay, so you get your 79,800. Is this volume or what is this volume or rand value here?
Where?
Yeah, this answer the 79,000.
It's rand value.
It's value.
Just checking if you're sleeping or awake. Okay, so my total fixed cost is estimated. Not my fixed cost, my my fixed cost. So my fixed cost is 93,100, right? And if you add the two together, you're going to get 172,900. So this is my production overhead budget, which consists of my fixed cost and my variable cost. Okay. So your variable cost, 20 rand per direct labor hour. So you have to bring your labor hours into it. Okay, is everything clear on this?
So you took the total direct labor hours required, and you times it by the direct labor, which was 20 rand. Am I correct?
Right.
And then
Yes.
then you got the 79,800.
Yes.
Okay. So
And then I added the fixed cost.
what does that symbol that you put now there? Oh, that's yes. I was wanted to know what symbol are you gonna put there?
Symbol we.
Oh, what
Not with you.
your answer there? Yes, your total. Oh, I wanted to know what was your answer gonna be.
You
How you
tell
are
me
gonna
what is it going to be. It's a
because
rand.
it's rand, yes.
Yes, they all rand. Everything is about money in accounting.
Okay.
Everything is about money. Okay. So now they're asking you, just see the cost of the goods sold. We haven't got to that yet. So I'm going to skip the rest now because cost of goods manufactured and sold, that's a chapter on its own. Remember, I jumped to budgets because we were still threatened about what is important or not. So I jumped to budget, but we're going to get back to the cost of goods manufactured and sold, and we'll go back to these activities. Is that okay with you people?
Okay. So
now,
you're not gonna go deeper into this production budget because of that observation cost manufactured per unit
type of thing, yes, and that we're going to do with the cost of goods manufactured and sold budget.
Okay.
Because that is it's in another chapter. It's a chapter on its own.
Is it not chapter
So
7?
I want to, yeah, it's a chapter on its, yes.
Chapter
Yes,
7.
it is.
Okay. Because
yes.
Because when I read about it, I quite got dizzy a little bit, you know.
Does he? Why?
Yeah.
Maybe you're not taking your medication. No, it's not that difficult. But it's going to be confusing now, man. So let's just do that chapter on its own and we can get back to this. Let's just concentrate on all our budgets now. So let's move on to the next page, which is 13.4, which is the retail budget. And that's what you asked me the other day. Okay, so let's do, remember, a retail budget will not have a production budget.
Production budget, yes.
Because they're not producing anything. So they will have, so they will have different type of budgets, which would be like a purchases budget and a merchandise budget and that type of budgets. Only makes sense. Okay, so let's look at activity 13.6. Color burst buys and sells coloring in books and pencils for children and adults. Adults color in the books are of a standard size and quality and cost the same. During the forthcoming financial year, end on the 30th of September, anticipated sales and quantities are as follows. So they're giving us quarter 1, 2, 3, blah, 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 blah.
Sorry,
Okay,
Aziza, what page
now
is this?
the next page, I'm on 341. I don't know what your book is, but it's
Oh,
activity
yes, sorry.
13.6.
6. Okay.
Okay.
Thank you.
Closing inventories at the end of September 2016 included 500 books and 50 Rand each, and 300 pencil sets at 80 Rand. Management wants future inventory at the end of each quarter to be 400 and 200 pencil sets. Calaburst has entered into an agreement with its suppliers according to which the cost of books will be fixed at 50 Rand and 80 bucks respectively throughout the budget period, provided that purchases for the year will be at least 300k for books and 400k for pencils. The selling of calibers are determined at 80% markup on cost. Right. Remember you had that question in your assignment, 80% markup on cost? The expenses for the year are estimated as follows. Blah, 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 blah. These expenses are incurred evenly throughout the year. That's really important. They incurred evenly throughout the year. Okay? Commission is paid at 6%, at 3%, sorry. Right. So let me just take out my calculator again. What did they say the unit price is? 50 Rand.
There's two types of products.
Okay. Yeah, there's two types of products. So the unit price is 50 Rand, the unit cost, and the markup is 80% on cost. Right? So you're going to say on your calculator 50 times 1.80. Yeah, then you get 90 Rand. But your question in your assignment was other way around. So tell me something. If your selling price is 120 Rand and you apply a 75% markup on cost, what is my unit cost?
It's 210.
Anybody else?
Sorry, you said how many percent on markup?
I said 75% markup on cost, and the selling price is 120.
Yes. 210.
Anybody else?
$210. Got $210.
You got 210 at the unit cost. Does this look logically? Does it sound logical? 25%.
Cost price is gonna be 90 Rand.
90 Rand. Okay.
90 Rand.
Is it not 120 times 75 divided by 100? I also got 90 Rand.
90. Yes, it's 90 Rand.
So does 90 sound so let's put in 90.
68.
Oh, so okay, so we've got a 68.
See, there's more 68 in the chat.
68. Okay, so my markup price is going to be 52. Oh man. This just doesn't want to go away now. Oh, it's 52 then.
How did you get to 68? Oh, I don't know.
Bilkies, how did you get the 68?
And
The wrong,
Wendy also.
the wrong answer, you mean?
No, it's right.
Oh, 68, right?
Yes.
Oh, okay. I said 120 divided by 175 times 100.
Okay. Let me give you another one. If my unit cost is 400 Rand and we apply a markup of 91%, what would my selling price be?
Selling price is gonna be 716.
716.
760.
Why did I get 764? Did you get 760 or
764.
did you also get 764? Did you
Yes.
apply 90 or 91%?
Oh, I applied
91.
90.
Okay, so it's 764. So okay, so we all get this picture now. Okay, so we look at the books and the pencils, and we got the unit price was 1580 because the question gave us that. And then they told us it's the 80% markup on cost. So we say 50 times 1.80, you get your 90 Rand, and your markup at cost was the 40 bucks. Right. Yes.
The 91%.
Go on here, the line is screeching on my side. You can ask again, maybe somebody else can answer. And here.
I'm asking how you got the 764. Don't you multiply the 400 of the unit cost by the markup 91%? How did you end up with
No, you times
764?
it.
Because
What did you get? You say 400 times 1.91.
why is it 1.91? Isn't 91 divided by 100 0.91?
No, you remember, you have to, it's 100% plus the 90 is cost, full cost plus the 90. So that's why you go 1.91. If you're going to go times 0.91, you're going to get 364. And can your selling price, ask yourself this question, is this logic? Is it logical that you can have a selling price of less than your unit price? No.
Okay. I see.
Can you see the logic behind this?
Yes.
So that is why you say times 1.91 when you want to know what your selling price is going to be.
Okay.
Okay. So now we have a retail budget. So we have, let me just delete this stuff quickly. Delete, because I want to use this. So we have our quarter one again. We have our quarter two, we have our quarter three, and we have our quarter four. Okay, so we are trying to calculate our sales budget. And we do know that sales budget remains volume times rand value. Right, so let's do one of the items first was books. And the other one is pencils or pens or whatever. Okay, so we're looking for the volume. They told us that the volume was 2,000, 1,000, 1,800, 1,700. Rand value, did they give us that? No, they told us somewhere that, let me just see. Where do they tell us about the price of the projected units? They said somewhere about they're going to will remain the same. Closing inventories at the end included 500 books and 50 rand each and 300 pencils. Management wants closing inventory at the end. Calabash has entered into an agreement with its suppliers according to which the cost of the books will be fixed at 50 rand and 80 rand respectively throughout the budget period, provided that the purchases for the year will be at least 300,000 for books. Oh, sorry, I'm mixed up now. Nobody's even telling me. We calculated that 90 rand when they said it's the 80% on cost. The selling prices are determined at 80% on cost. So the selling price was 90 rand, right? You with me?
Yes.
Okay. So 2 times 180 is 360,000. Okay, 1,000 times 90 is 9, 1, 2, 3, 4 is 90,000. And then 1,800 times 90 is 162,000.
1,000.
And then 1,000, how much?
Sorry,
Then
Aziza.
1,700 times 90. Yes.
No,
Isn't
Aziza.
quarter one 2,000 times 90,
90 rand. Yes.
180,000? Where's the 360,000 coming
Yes.
from?
Made a mistake,
Oh,
Aziza.
sorry. 2,000 times 90. Okay, it's 180,000. Sorry. Okay, sorry. Okay, I said 180,000 times 2. Okay, so the pens, we know that they're selling on quarter one, we budgeted for 1.8. We budgeted for 900. We budgeted for 1620, and we budgeted for 15,000. We also know that our selling prices was anticipated at 80 rand for the unit cost, divided by the 1.80. Sorry, multiplied by the 1.80, and then we got 144 rand. right? So you got 144 Rand. Okay. So you multiply it, you get 259,200 there. 900 times 144 is 129,600. 1620 times 144 is 233,280. And 1530 times 144 is 220,320. So you have to add these two together, right? Let's just call this product A, and let's call that product B. If you add the two together, you will get the total sales budget for pens and pencils and books and whatever they're selling. So 439,200, 219,600, 395,280, and 373,320. And this must be in Rand. You can just do that. Okay? You don't have to put the R all time in front. Okay, so that's my sales budget. Now we're going to do the purchase budget for books and pencils. Is there any questions on the retail budget?
The question
On the
that
sales budget, so far what we've done?
it was calculating the.
Yes.
I will say personally, we all got confused when you trick us there, when you change.
I did not trick you.
No, you didn't trick us, but you just tested our knowledge, where you just played around with us a little bit. That was where I think most of us got lost.
Okay, just remember, no? Say you got something here, like say a unit cost. Say you got a unit, right? And then you got your cost maybe, and now you want to know what the selling price is going to be, right? So let's say this is 50 Rand, this is maybe 40 Rand, and that is 90 Rand, right? Now if they asking you, if they saying to you that it's a cost on 80% markup, just look at it logically and say that because I'm looking for this figure, it should be less than that. So then you're going to divide. Let me just see, 90 divided by 80 percent. Nee, wat vang ek nou aan? Ek vang nou nonsens aan. Julle maak nou sommer vir my die mekaar. Divided by. Why was I so confused? How did we get the 40 again, the 50 again? 90. Wait, let me do it on my phone.
180.
90 divided by 1.80 is, but I don't know why my calculator on this one doesn't want to do it. My phone never lets me down. So then you're going to get the 50. So you're going to say 90 divided by 1.80, right? If you're looking for this figure, right, you now know that that figure must be bigger. Let me just use my own calculator. So I'm going to say 50 times 1.80. Then I'm going to get the 90. So then I'm going to say 50 times 1.80. 1.80, sorry. And then you get your 90. So first plot it. Where am I? Otherwise, you're going to make a mistake. You plot it like this. Unit cost will obviously be less than selling price, because no person is going to make something and sell it for less. Okay? So then you know, okay, am I looking for a bigger figure? If I'm looking for a bigger figure, I multiply it by 1.80. If I'm looking for a smaller figure, I divide by 1.80. The lady that asked me about, like, don't you take like 0.80, but she said it in a different, with a different number. If you were to do that 90 times 0.80, you wouldn't get the right answer. So okay. So
Okay.
you take that figure because it's markup on cost. Markup is 100%. That's why that 1 year is actually representing the 100%, comma 80. That's how you do markup on cost. But that's something that you're going to learn and practice and take note of every time when you get these type of stuff. So let's move on to my merchandise budget. Okay, so we have Q1, Q2, Q3, and Q4. Once again, 2,000 units, 1,000, 1,800, and 1,700 units for books. Now they're saying to us, you're going to have to add your closing inventory. So let's do this. So what is our closing inventory? Anybody?
They told us there in the paragraph where the management want future closing inventory at the end of each quarter to be 400 for books,
That's it.
200 for pencils.
That's it. Okay, so we're going to add our closing inventory. Okay, now we have our closing inventory. Now we're going to have to take out our opening inventory, same like we did with our production budget. Okay, so we're going to deduct our opening inventory. Okay, so what is our opening inventory actually?
Remember, oh, closing inventory. Okay, they're saying then the books for 2016 from the previous quarter, it was 500.
Okay, that's right. And then all else, management wants the 400.
Yes, in
Okay,
future.
so we take off. Ah, man, why didn't I have minus it? Let's just go minus 500, minus 400, minus 400, minus 400. Okay, so now I have to get my purchases that I'm going to need. So let's deduct it. 1,900. 1,400 minus 400 is 1,000. 2,200 minus 400 is 1,800. And 2,000 minus 400 is 1.7. Right? So now we know that is our purchase required. Right. Now, what is the purchase price that we're going to purchase it at? Okay, I said there that inventories at the end of September included 500 books at 50 Rand and 300 pencil sets at 80 Rand. Right? Calibus has entered into an agreement with its suppliers according to which the cost of the books and pencils will be fixed at 50 bucks and at 80 Rand. Okay, so our cost is 50 Rand, 50 Rand, 50 Rand, and 50 Rand. So our total budget for what is this? Books. For books will be 1,900 times 50, which is 95,000 for quarter one. For quarter two, 1,000 times 50 will be 50,000. 1,800 times 50 will be your 90,000. And 1,700 times 50 will be 85,000. Okay, so there we have our budget for books. Right, now let's do product B again. Product B, let's put it here. Product B wants 1,800 units, 900 units, 1,620 units, and 1,530 units. Okay, I think I'm going to give you 5 minutes and you just do this one. Because it's the same concept. Don't look at the solution. Same concept. Then you just tell me what's the total bills here for quarter one, quarter two, quarter three, and quarter four. And if you've got a different answer, let us just discuss why you got a different answer.
I don't know.
Did you get an answer? Anybody get an answer?
Yes. Do you want the total purchases budget for A and B, or just the one for B? For the pencils.
Sorry, I didn't hear anything now. Did anybody get an answer?
I asked if you wanted the total purchases.
Yes. Yes,
Okay.
please.
So for quarter one, must I explain how I did it, or can I just give the final answer?
Yes. Okay,
Okay.
just give the final answer, and whoever doesn't know how you got it, you can explain then.
Okay, so for quarter A, I got 1360,000.
Mm-hmm.
And then for quarter
Okay.
two, it is 72,000.
Okay.
Quarter three is the 129,600.
Okay.
And then quarter four is 122,400.
Okay. Does everybody agree with her?
Yes,
So she's
yes,
right.
yes. We are in
Okay.
agreement.
Yes, yes.
You are in agreement. Okay. Let's move on to our expense budget. Okay, just give me a sec quickly. Okay, so once again, you're gonna have to draw up a framework. So our sales was how much? Okay, so we want to calculate our commission. Okay, so all expenses, you're gonna have to know what is expenses to put in this budget. Okay, so let's start with commission. They said commission is 3%
Yes.
of sales. So what was sales? What was our sales
We
for
had
quarter
different.
one?
Okay, the
Yeah,
sales. Okay, so for quarter one, we had that 439,200. We take 3% of that. Am I right?
yep.
Then for the
And what do
second
you get?
quarter.
What do you get?
Oh,
Give me the answer,
oh,
please.
sorry. I'm just gonna give you the answer. It's 13,176 rand.
Yes. You know, I want to tell you something in the exams, work on a calculator or on your phone's calculator. This calculator on the computer, I don't know if you noticed, it gives you wrong answers every time because it like saves it in the memory if you don't clear it properly every time. So use your actual calculator. Okay, the next one was
The next one will be 219,600. And then that will be 6,588.
okay, and the following quarter.
So it's 395,280. Sorry, 395,280. It's 11,858.
Okay, and the fourth quarter.
The last quarter was 373,320 rand. 3%. It is 11,000. Okay, you must round it off. So it's 11,200 rand.
Okay. Our next expense is rent. And they did say that these expenses are incurred evenly throughout the year. So our rent was 30,000, right? And you say
We have to do.
30,000 divided by the 4.
Yep.
Yes.
Yeah, you have to divide it. So then you're going to put 7,500 per quarter. Okay, let's look at insurance. Same story. What was insurance? 6,000 divided by
Divide by 4.
4.
1.5.
Yeah, so it's 1,500. Okay,
Sorry.
salaries. Okay, same story, evenly incurred evenly throughout the year. Ugh, so what was it? 300,000 divided by the 4, which was
75.
25,000. Can you see if you break these things up, it's not so difficult. Okay. Other cost was 55,500. And so it is 13,875. Okay. 13,875. Okay, so now we tally up all our expenses and we get on this one 11051. This one is 104,453. In this one is 109,733. Ach nee man. And this one is 109,075. Okay. Okay, many of you did do accounting, so we just do the profit and loss. Now, you know how to do your profit and loss, but this is just called a budgeted profit and loss. Budgeted, why? Why do they call it a budget profit and loss?
We want to see our sales. Sorry, we want to compare our expenses with our gross profit so that we can see if we make a loss or we made a profit.
But why do we call it a budgeted statement of profit and loss? Because it hasn't incurred yet. Nothing has happened yet. So that's why we call it a budgeted profit and loss. Budgeted is anticipated, forecasted, it's imaginary, if you can put it that way, or wishful thinking, let's put it that way, not imaginary. Okay, so our sales was all the sales that we had here. Where's the sales budget now?
It's right on top.
Yeah, so it's all these here added up together. So if you add up all those, what do you get?
You get when the sales, when you add up all your sales,
All your sales budget, yeah.
you get 1,400,000 1,427,400.
1,427,400. That's how you read the number.
Yes.
Because you laughed at me the other day with that word. Okay, my cost of sales. What is that budget?
You didn't do that budget.
Get my cost of sales. Yes, we did. Yes, we did. What is 231,122,000 plus 219,600? The merchandise budget.
The
Plus the
790.
207,000. Yes. Yeah, so you get it from your merchandise purchases. Okay, so you're going to minus the 793,000, right? So you're going to get 634,000 400. Okay, so that's your gross profit.
Aziza, did we do that budget? The cost of goods sold
Yes, we
budget
did.
for the. Where's mine now?
Yes. Yes.
Why am I now so?
Yes, it. So here's my budget. I did it. I don't know what you did. You gave me the answers, Bilkis.
Oh yes, yeah, I see it now. Okay.
Okay, so you
My
add up
body.
all these, and you will get your cost of goods sold budget. Now we want our expenses. And what is that? Expenses come from my expense budget. Okay, so my expense budget is the 434, 322, and then my gross profit, my net profit is 200,078. Okay, now let's test you. Let's see.
Aziza.
So say I don't know if this is gonna work out. Yes.
Sorry, Aziza, man. I understand very well what we have spoken about so far, but I just want to go back to the cost of sales, man.
Yes.
The one that you walk out there, okay?
Mm-hmm.
Now, my question is, how did we get that 793,000?
Yeah, on top. On my expense budget. Remember, this is my sales budget. This is my sales budget. This is my expense budget. Add up all these numbers here.
From
95,000. This was for books.
Yes, I just add for books and for pencils, okay? So it was 95,000.
Yeah. Did you not get that?
50,000.
I got 780.
780. Yes, that's what I got as well. That is why I'm saying.
And then we see 95 plus 50 plus 90 plus 85 plus 136 plus 72 plus 29 plus 122.4. Oh, did you get 780,000? Isn't your typo here with me somewhere? 95, 50, 90, 85, 136, 72, 129, 60. Let's just see. 231 plus 122 plus 219 plus 207. Yeah, it is 780. So somewhere along the line, there is a typo error there. So that would be 780 here. Okay.
But
you
know why?
No, yeah, it is 700. Yes. Why?
It's because when I look at the cost of goods sold budget for the year, they work it out. They work it out differently.
Oh yes, 793,000. Let me just see.
There's something that we didn't.
25,000.
It's coming from there.
It's probably because we didn't do this budget here. Okay, so let's just do it quickly. Your opening inventory, right? So your books is 500 times your 50 rand, right? That's correct. And your 300 times your 80, right? So that is 25 and just 49,000. Then my purchases, oh, we didn't take into account was our opening inventory. So we took the 793 and we didn't take
Just
into
like that.
account the opening and the closing inventory. Yeah, we didn't take the closing and the opening inventory. Sorry. So then our closing inventory was 36,000. Okay, sorry. So that 793,000 is your cost of goods budget sold and not the purchases. Okay. Jammer. Okay, so I wanted to ask you something now. So if I have, say I have 1,000, 15,000 a year, I have 2,000 a year, that means to say my gross profit is 13,000. I don't know really what I want to ask you now. Just trying to work out something. Okay. So I want you to calculate my net profit and all I'm saying is that the following following expenses was incurred, and let's just think let's just think now. Okay, so I want you to calculate my net profit now. This is very easy.
Okay. Let's just look at your example. Okay. You say you're giving us the sales as 15,000. Telling us that our cost of sales is 2,000. Giving us the gross profit of 13,000. You want to know what is that NP? Our net profit.
Aziza.
Is it
10,000. Is it? I don't know the answer. Why did you get the answer, Robin?
I said 12% of the 15,000, which is 1,800, plus the 1,200 for insurance was 3,000, and then deduct that. That 3,000 from the gross profit, which gives the net profit to be 10,000.
I also get 10,000.
Just hold on. Times 12% is one. How can you people get 10,000?
Not expenses. Expenses is
Oh, it's
3,000.
okay. Okay, sorry.
The
I
net
thought you
profit
said
is
expenses.
10,000.
Okay, you're right. Okay, sorry. You're right. I'm thinking I can discount the 10,000 the expenses. Okay, so that's right. I'm sure everybody got that. Okay, so now here's another example I want to look at, and this is
Sorry,
I want you
Aziza.
to do.
Can you please go back to
Yes.
budget statement of profit or loss? Where did you get the expenses?
This.
Under
The
budget statement.
expenses is from the under the expenses was what is the one? Let me just add it up quickly here.
Please.
Let me just see here. The 111051 plus 104,463 plus 109,733 plus 109,075. Now I'm getting 10 million. Let me go back to my phone calculator. Don't know what it is. Okay, let's just see. 1051 plus 104,463 plus 109,733 plus 109,075. 322, yes. So it's all your expenses of quarter one, quarter two, quarter three, and quarter four that we
Thank you so much.
calculated here.
Thank you. Okay,
I
thank
could have
you.
actually just auto summed it. Okay.
Sorry,
So
Aziza, I have a
let's look at
question.
another example. Yes. Yes.
Isn't that 12% commission for the insurance? Why do we multiply to the gross profit? Shouldn't we multiply the 12% by the 1,200 of the insurance, and then whatever we get, we subtract to the gross profit?
Are you talking about that example that I made up?
Yes.
You just add it. You say 12% of 15,000, it's 1.8, and you add the 1,200 because we want to know for the year.
Okay.
Does it make sense to you?
I thought we were going to multiply the 1,200 to the 12% commission because I thought the commission was for the insurance.
No, commission was 12%. Commission was now always on sales, and insurance was 1,200. Okay, so you just misunderstood the question. Okay. Let's look at another interesting example for y'all. Page 350, question 4. Okay. So let's do question 4. And okay, are you all there on page 350? Tapama Limited manufactures deck chairs. The selling price of each chair is 1.8. Budgeted sales for the first quarter of the forthcoming years are as follows. April 8,000, May 7,000, June 5,000. Right, we already got information to do what with. What am I going to do with that? What is this place's name? Apama. What am I going to do with that information?
You can calculate the budget for April, May, and June by timesing the amount of cheese.
But what budget are we going to do?
That would be the budget on sales.
On sales, yes. Okay, so I want you to give me the answer for April. I'm just going to give you 2 minutes, May and June. Okay, so you give me the answer. I'm going to give you 2 minutes quickly. Okay, April, May, and June. Okay, do we have an answer? Do we have some winners?
The amount for April is 14,400,000.
Okay, and for May?
And then May is 12,600,000. And June is 9 million.
And June?
Is 9 million.
Okay. Yeah, I've got 9 million. So it is the units, once again, multiplied by the selling price, the anticipated selling price. Okay, great. Okay, so it was 8,000 units that they anticipated to sell, 7,000 units, and 5,000, right? And the selling price was going for 1,800. Okay, so we've got our budget, our sales budget. Now, I need the production budget. So give me for April alone. I'm just going to give you 5 minutes, and then you give me the answer for April, the production budget. Anybody with an answer for April? Okay, Pum Pumza, do you want to go for it? Anybody want to go for April?
Aziza, I think I'm gonna try.
Yes. Okay, do you want to try?
Yes. So they say for April.
Uh-huh.
Hello. Oh, and then that planned closing inventory. Yeah. So I read here they say finished
Uh-huh.
goods at the end of the month must be 50% of the next month's budgeted sales. So the budgeted sales for May is 7,000. So 50% of that is 3,500.
Okay.
Yeah. And then to
Okay.
add that, and then it's
So I'm
11,500.
gonna add, okay, so I'm gonna get 11,500 and our closing inventory, our opening inventory.
Yeah, that's where I'm a bit.
Anybody want to help out?
I don't think that
It's 50% of
amount that you
projected
got there,
sales.
the 50.
Can you hear me?
Okay, just read on page. Yes, yes, I can hear you.
That's 50% of the projected sales, which is 4,000 rand.
Yes, yes, which is of the 8,000, right? Because the closing
Yes.
inventory for March is equal to the closing inventory of April. Okay, so it's the
Yes.
4,000, sorry, minus the 4,000. So we're going to
To the
get out 7.5 thousand.
Yes.
Okay. May, can I give you less time to do May, so that you know the drill now?
Oh, okay, May's actually. Aziza, I think I can do May because we have the information of April for that opening inventory part. Can
Yes,
I?
I'm waiting.
Okay.
Yes.
So your
Okay.
projected sales is the 7,000.
Okay.
The planned closing inventory is 2,500 because it's again
You got
the
from?
50 from the 5,000 rand of June,
Okay.
and then together that's
So that
9,500.
is 9,500. Okay.
Yeah. Then
And your
that
closing
3,000.
inventory?
Yeah. Sorry, you mean the minus the opening inventory is the closing inventory of April, so it's the 3,500.
Yes.
And then you get
So then you're gonna
6,000.
get 6,000.
Yeah.
Okay. You can do June for us as well.
Okay. Just hold on. Okay, so the 5,000 is the opening, the 5,000 June, the normal projected sales in units.
Mm-hmm.
Then that 2,250, is it the half year where they tell you budgeted sales 4,500 and 5,500 for June and August respectively? So it's 4,500
Mm-hmm.
times 50%. That's at 2,250.
Mm-hmm.
And then you get
Mm-hmm.
7,250 minus the closing inventory of May, which is the 2,500, and then you get 4,750.
Yeah, you give cookies a clap, a round of applause. Just give it to yourself. They don't want to give it to you.
Yeah.
They hate us. Hate us, these people. Okay, so let's only do the direct material budget for this one, for April. Because we kind of like get this whole thing, so we're not going to do all. So let's just do the direct material budget for April, or you're going to do it and then you're going to tell me how to do it.
Aziza, I think I can attempt it.
Mhm.
Okay.
Okay.
So, the production units, I mean the projected units of production, that's at 7,500 that we worked out on the previous one. And then they say material A, the production requirements. So it's 2 meters times the 7,500 times 2 meters, 15,000.
Mhm.
And then the planned closing inventory. I read this somewhere. It says direct materials at the end of the month must be 100% of the next month's production requirements. So again, looking at May, so May is 6,000, and then you times it by the 2 meters, and then you get 12,000.
Mhm.
And then the total there is 27,000.
Mhm.
And then for opening inventory, I require a bit of assistance again.
Anybody want to go with the opening inventory? The opening inventory is not the 7,500 times 2.
Oh, the projected units times 2 also.
I think so. Anybody else?
I also think it's the same as the production requirement, because when you look at the following months as well, that's how it's counted.
Okay, what does the question say? Direct material at the end of the month must be 100% of the next month production. Finished goods at the end of the month must be 50%. Okay, so the production requirements for April is 15,000, right? Therefore, the closing inventory at the end of March would be 15,000. Okay.
Oh.
The closing inventory for March is equal to the opening inventory of April. Therefore, the opening inventory for April is 15,000. Okay, so let's deduct that 15,000 here. Okay, less your opening inventory. Okay, so 27 minus 15 is a 12.
12, yeah.
12,000. So 12,000 is your requirements, right? And what is the cost per unit? What did they say it was?
100 rand
Per unit, per meter.
Yeah.
How did you get to the 100?
Don't they tell it? They give it to you somewhere.
It's given.
The cost of opening.
Given.
Cost of yeah.
Given.
Yeah.
Okay, so the 100 rand. So 12,000 times 100 is 1,200,000. Okay, it looks like you all understand this now. The production budget and all your budget stuff of just say.
Aziza, just a question.
Was this thing not recorded? Was this lesson not recorded?
It is recorded.
When did it start recording?